This conference will now be recorded.
Good afternoon, everybody. This is Greg Morton. It is Saturday, May 21st, 2022, and this is the weekend update for the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, this is for educational purposes only, not recommending stocks or securities to buy or sell, and particularly in bear markets. All investing has substantial risk of big losses. So we want to learn first and only then invest. So this weekend, we'll look at the impactor like we always do, talk about what do we see this week, constructive action or destructive action after a roller coaster week of roller coaster days. Look at some charts. You know, the grim reaper of EPS season continues to just really slice and dice. This has been more serious than I can recall previously. And then we'll look at our educational monthly meetings. So the M factor, of course, in the world of Canslim, it's the most powerful letter in the world, thanks to BMW for the little graphic and their motorsport series. Key principle is that extensive O'Neill research, not opinion, shows 3 out of 4 stocks follow the general market trend. I think in a bad bear market like we are now, over 30% on the NASDAQ, you know, it could be as many as 9 out of 10. We need to stay in step with the trend, otherwise we're going to have a bad income. And it's very difficult, actually I think it's impossible, to win on the long side when the trend is not your friend. And right now, the trend is not our friend. We definitely are not in an uptrend. So per O'Neill and IBD, we always just want to diagnose, interpret. We don't want to predict when things are going to turn around or predict when we're going to be in an uptrend. We know one is coming, we just don't know when. So there's three things we look at to interpret market direction. Action of leading stocks, aren't many of those left. We're down to the energy sector, which has led for a while. Chemicals, materials, maybe we're seeing a little bit of strength, and a little bit in medicals, not much else. Actions of stock owned, not much in the group teaching portfolio. We only have 3 holdings and it's only 2 full dollar positions. Then we look at the market pulse, distribution, day count, price and volume on the indexes, and the coloring book, which just shows we had a massive roller coaster week this week. So let's take a look. Let's hop out of here and go over to MarketSmith. So here's the daily on the NASDAQ. Here's the 30% off line. So these are 10, 20, 25, 30, and 35. So you can see this week we actually came down and made a new low. This was a wild week because we had a follow-through day actually on Tuesday, then immediately went under pressure for Wednesday and Thursday, and then the follow-through day on the NASDAQ, as well as the S&P 500 both failed on Friday. And we had new rally days just to keep us on our toes. So I got to fill in the rest of these colors down here, but you know, it just still looks bad, still under the 10-day moving average line. All the moving average lines are stacked in the wrong order, 10, 21, 50, 200. All of them have rolled over and are pointed down. Here's S&P 500. So it finally got to bear market territory this week. You saw all those headlines. Oh, we're in a bear market. The S&P 500 hit it. Hey, we've been in a bear market. So headlines are just catching up. S&P 500 just took longer to get there than the NASDAQ did. So NYSE, I need to put the 20% line on there. I don't think it's down that far yet. So actually the RS line here looks better than on the other indexes. But again, under the 10-day, all the moving average lines stacked in the wrong order. Just a lot of work to do to get this market back, you know, above the 21 days, kind of what we're looking for, at least on the NASDAQ, to really hope see some sort of sustained, at least a short-term uptrend. So that's the Dow. Russell actually held up a little better this week. Small caps did than everything else. This still is 30% off down here. So actually the NASDAQ has gone lower than the small cap indexes. Kind of unusual. As I recall, it's unusual. And then here's the same thing. This is only 20% off on the S&P 600. So those are the index charts. If we jump over to the coloring book, we can just see this wild week where, again, on IBD, we started the week under pressure, had a New follow-through day on Tuesday. Immediately had a terrible day, went to under pressure, and Friday went back just where we started the week. So if you just look at Monday and Friday, you'd think not much happened, but a lot did. So again, we had those follow-through days, and then they failed here on the Dow failed on Thursday, and the NASDAQ and the S&P 500, which is our fourth follow-through day in this fair market, those failed on Friday. And then we had new rally days also on Friday, which is number 11 on the NASDAQ, number 9 on the S&P 500, and number 8 on the Dow. So Friday was day 1, sort of take it perhaps with a grain of salt. And we're looking for another follow through again, which the earliest would be Wednesday of next week. But there's a lot of weight on this market. This was really a bad day. I mean, the NASDAQ was down 4.75%, S&P 500 4%. That was just a wicked day the day after a fall. And we had distribution the day after a follow through day, 2 days after a follow through day in a row. So that's never good. Still have high distribution day counts. It's not much, and just everything's red on the MMTS, and then everything's red on the new high, new low indicators on both the NASDAQ and the NYSE. So nothing pleasant there either, really. Let's go back here. Group teaching portfolio. There was that really, really bad day, got hit hard, didn't do much on the follow-through day on Tuesday, then got slammed. So still down 10.5% for the year, compared to the NASDAQ being off about 32%. That's outperforming, but that's not our goal. We would like to be in the green. So only 35% invested, just 3 positions. One of them's an ETF even. So really just Merck and a half position in SQM. So at least those two have a little bit of cushion building in them maybe. So we talked about that in more detail in our big monthly meeting that we had this past week that we'll touch on in just a minute. So go back to this, some keynotes. Window of opportunity still closed. We saw that in the coloring book. IBD's back to in correction where we started the week. Everything on the MMTS is just solid red again. Heavy distribution day count, 6 on the NASDAQ, 7 on the S&P 500, 8 on the Dow. Market school model is stuck at 0 exposure. Buy sell day count, 8 of 13 is showing the sellers in control. So we sort of have a distribution dominant tape. Already talked about that. This week went in correction to confirmed uptrend to under pressure to in correction. Charts are getting whacked, especially on earnings. And growth have been in a bear market. The rest caught up, and we're still in power outage conditions. So here's a summary of the week. Started out red. Tuesday had the follow-through day. Wednesday and Thursday were maybe, went back to under pressure. And Friday we were back to no. So if you need it graphically, there it is. So there's still a lot of red lights overall. To me, this is just another angry bear malls all again week, particularly on earnings. Still a lot of weight on this market. Fed talk and now the Fed walk. How fast, how far on rates, balance sheet reduction, inflation, milk, gas, meat, everything else. Recession, 1 quarter already, negative GDP. And with all the retail that got hit this week, certainly looks like we could easily get there. Big supply chain issues, baby formulas in the headlines now, just everything. EPS season, super, super ugly, a lot of weakness. War situation today is day 87. You're hearing Russia exposure come up in conference calls, McDonald's selling all the restaurants to an investor in Russia. So they're getting out of Russia. So things coming out of Ukraine, grain shortages, they're sort of the breadbasket of the world, is sort of what they're known as, big farming area. So just a lot to come from the Russia-Ukraine situation. Things to keep an eye on. Are we going to see capitulation? Look for fear, put call to spike. Are we going to see climax runs in energy stocks? I mean, already we've sort of seen them sort of roll over. Maybe they're not going to have climax runs. Maybe they're going to have, one last sort of spurt. We don't really have any leaders standing. Apple and Tesla were the last two leaders from the last uptrend. And so it looks like they are breaking down. Average bear market is 9 months. So now we're 6 months in. August 22nd will be 9 months. Of course, the dot-com bear and the financial crisis bear that we reviewed in detail at our meeting this week went much longer than that. So let's go back, just look at some charts real quick. In Market Smith that I threw in here for the weekend, weeklies. So, Walmart got slammed this week on earnings. They're now 25% off the high, and they were down almost 20% this week. Target, same thing, down almost 30% for the week, 42% off recent high. Ross Stores, 22% for the week. I mean, these are the discounters that are getting hit, which we wouldn't be expecting heading into the consumer tightening its belt. Costco got slammed, now 32% off its high. Kohl's, 20% off this week, 40% off its high. Cisco, I just put it in here because, people always talk about buy and hold. And of course, Cisco's last high was in the dot-com at the peak of 2000. So they got slammed this week. Deere got hit hard. Docs, this was an IPO that, was tradable back here. I liked it. I thought it was a really neat business model. Just got creamed, 71% off its high. Here's Apple that we were talking about. Let's go to a daily on Apple. So, you can just see the cascading selling, the movage average lines diving, the 50 about to cross over the 200. Terrible RS down at 62. Tesla, RS at 46. You can see the same thing. The 10 and 21 have just dive bombed down through the 50 and the 200. Then a couple places here's, I didn't mention these earlier. The shipping has been strong. It's hard to find a place to enter these, but this was another segment that had been strong. So here's Golden Ocean Group. I call it Goggle. Zim is kind of setting up a bit, but this was a second stage base, right? Yeah, so not interested in third stage bases in a bear market or right at the beginning of a new uptrend. Lithium plays, so this one's nice. You can, look at that RS line. See the market diving and this RS line's just going, what bear? So that's strong. Merck is sort of doing the same. It's actually, that green line is also an all-time high. So it's at an all-time high. Again, RS line it's just fighting the bear tooth and claw, even though it's only 5% from its pivot in 4 weeks. It's just going blow for blow with the bear, just like SQM is. So let's go back. So one other thing, I threw this in. Normally I do these at our monthly meeting, but we covered this one this week, so I'm gonna put it in this weekend. So here's a screen set up in Market Smith. I've shared before, Market Smith is a really, really powerful screening tool. I really don't do a lot of custom screening though, because the Growth 250 and the list in the paper, when I use those in my weekend review, that normally captures everything. But at the meeting, we talked about the importance of the RS line in a bear market. And so there's a new screening tool they put in Market Smith where you can put in the criteria to see stocks with the RS line within 5% of its high. I think it's the annual high, 1-year high. And so they've had in there the RS line blue dot, which is, hitting a new high, or there's a RS line new high screen already in the Growth 250 that gets you those, but this gets them earlier. So if the RS line is really important to us, and it is in a bear market, it's showing you that's the line that answers the question, is this stock a leader right now? It might not be a buyable Canslim stock, it may not be set up right, it may not have Canslim criteria, but a good RS line shows you, hey, I'm fighting the bear. You need to decide if I'm one to pay attention to when we get in an uptrend. So I built a simple screen to incorporate this. We looked at it at our meeting. You can build it in Market Smith. Here's the parameters. I I put in 75 EPS rating. I put in a comp rating of 80 because Bill normally didn't like to go between 80 on the comp rating. I lowered the earnings and sales, the normal criteria, from 25% to 20% just to make the screen a little bit broader. Wanted stocks over $15, need average daily dollar volume over $20 million per day. And you can see just those criteria get us down to 207 stocks out of 9,650 in the database. And then I put in the RS line within 5% of new high. Yes, I want to see that. So you click yes when you put it in here. So that knocked it down to 98 stocks. And then I thought, yeah, I probably won't return on equity. We normally look for 17%. So I lowered it a little bit, just like I did with the C and the A criteria. So running it this weekend, you get 66 stocks. So it's real easy to flip through 66 charts to add that little step into your weekend routine. And this actually catches several stocks that were already on my first pass watch list using the Growth 250, but it also added a couple for me too. So I'm gonna add this into my weekend routine, particularly in a bear market. So y'all can set that up and run it on your own. We did it at the meeting and I think we flipped through the list. So our big monthly educational meetings, here's what we covered this past week. The M Factor, looked at Market Smith tips and tools and that new screen that I just showed you about. Looked at rally days, follow through days, prior bear markets. Of course, we actually had the follow through day on Tuesday, the day we met. Went through a detailed way to handle EPS season in your weekend routine and a way to make sure you see any stock chart you're interested in at least 4 times a year so nothing sneaks up on you. We looked at our cousin stocks in the EV space, including the lithium stocks, the uranium stocks, that sort of thing. Did post analysis in the GT group teaching portfolio and looked at 2 IPO stocks maybe, and then stocks you guys ask about. And then our next meeting is Tuesday, June 14th. Here's some of our prior meetings. You can see the topics. These can be ordered. If you don't have a written set of cell rules, great time to work on that. I spent 3 months teaching that, so that was very extensive, and you would have your own set of written cell rules by the time you went through the 3 of those. Done a complete weekend routine, follow up on that. Recent meetings, here's what we covered. I don't have the May one on the list yet, but I just showed you what we covered. And so questions, contact information, the 2 meetup sites. The one I run with IBD is the Greenville Eastside IBD meetup. The Stockyard meetup site is where you sign up for meetings. You can email me about ordering prior webinars. Those are $15 each. You get the slide deck, the recording, the video, recorded video, and then any links I sent out after that meeting. So you can follow me on Twitter. And of course, you're on my YouTube page if you're watching this. Make sure to like and subscribe. There's other videos on there teaching on the group teaching portfolio, how to set up that spreadsheet and use it. Our May 2021 meeting in full is on there if you want to see a sample meeting. There's a video I did on the 8-week hold rule that I think is one of the misunderstood rules in Canslim. It's not even a rule, it's an exception to a rule. So you can check those things out. So that's it. Hope you guys have a good weekend routine. Everything stays the same even when we're in a bear market because we want to stay on top of the market. It may just be a little bit shorter. And that's it. I'm out of here.